Hemang Jani, good morning. क्या करा भाई मंडे के बाद? Everybody was running for shelter on Monday morning.
Yeah, good morning, Nikunj. So I think a very smart bounce back that we're seeing in the market, both in the main indices as well as the broader market, and I think that is a lot more comforting, even the pain that we've seen in the last 3 to 4 months. So I think given that there is a bit of a stability in the global markets, the FI flows appear to have kind of subsided in terms of selling the intensity part of it. So things should be okay. I think the rate cut hopes that people are working with, probably it's not going to be that simple because of the way our currency is moving. But on an overall basis, my feel is that we have some sort of a bottom in place as far as Nifty and Bank Nifty are concerned, and you should play your mid caps, with a bit of a selectivity. Overall, bias for the market remains quite positive.
Okay, I'm just scanning through some gainers and the losers here, and Naresh, it goes back to again capex versus consumption, and I'm making this point that everything in capex is not bad and everything in consumption is not good. So let's understand the good of capex and bad of consumption. Naresh.
So, if you look at consumption, there are different baskets we've seen. So, something like FMCG has corrected 25%, is now making a base and could make a slow comeback. Then you have something like ACs and other names and consumer durables, which is where the correction has also been large, and there could be opportunities purely for the fact that the correction is sharp. So, Voltas from 1950 went all the way to 1200, 1250 levels, whether it is IFB Industries and other names also. So there could be opportunities on the consumption side. The reason being there has been a 25% fall.
Right, there could be opportunities in the consumption side. Very good morning to you, Hemang. Cheryl also joining in the conversation. I wanted to understand, do you think now it's the time to look at sectors where there is some sort of a valuation comfort? Do you think that financials make the cut in that sort of a zone right now?
Yes, good morning. Absolutely. I think financials have been showing a lot of resilience versus the expectations of a muted Q3. I think many banks have delivered, good set of numbers. Asset quality wise, things are okay. If you have incremental liquidity support coming in, a rate cut is something that I'm not very sure how it's going to pan out. But on an overall basis, banking does look quite good, including some of the NBFCs which have gone through a deep correction. So I think private sector banks, ICICI Bank, Axis, some of the PSU banks like SBI, maybe Union Bank, and NBFCs would give a very good upside from a, let's say, 6 to 12 months perspective. And once this event, RBI event is out of the way, I think that will give us more clarity on the trend.
Mark, is the selling in some of the financial intermediaries overdone? Is it time now to grab again MOSL or Angel? Because the collateral damage of brokerage contraction after the new SEBI norms, that is something which Q3 numbers captured in. Now markets know that which way the business is moving, which way the cookie is going to crumble. We know that now.
Nikunj, within the entire theme of capital marketplace, what is very important for investors to figure out is which are pockets where you will see a very steady growth without any disruptions, and the pockets where you will still see next, let's say, few quarters of pressure. So the discount brokerage companies like Angel Broking or some of the other companies, I think you've seen that this Q3 has not been that good, and going by the data, maybe next couple of quarters are also not looking that great. Versus that, look at the AMC companies, be it HDFC, Nippon, you will see a very steady growth because of the way the SIP and the overall activity on the mutual fund side is going in. Even some of the wealth companies, I do think that they are very well placed, be it Nuvama, be it 361. So I would rather go with AMC or wealth companies rather than going with some of the brokerage firms where the best seems to be behind. You might see a bit of pullback here and there, but I would be more comfortable buying in those two themes that I talked.
Right. That's the take coming in on financial intermediaries and what should you do when, in case you're looking at those counters.
But other than that, onto the earnings candidate today, the focus will be on Gujarat Gas as well, because what we see that yes, indeed, there has been a sharp decline in their overall margins on a sequential basis. But when we look at the margin or the volume growth rather, the company has achieved its highest CNG volume, and going ahead, the APM gas allocation is likely to increase from here on and is likely to stabilize. Hence, the analyst community is expecting that there could be some resilience in terms of the margins is what they are expecting. But Hemang, help us with your take on Gujarat Gas as well, because all these CGDs companies are in focus. There's one play with respect to IGL that post-Delhi elections there could be a rise. Other than that, onto the earnings front, what the street is expecting is that the margins are bottoming out. So help us with your understanding on this particular space and Gujarat Gas as well.
So when it comes to this city gas distribution companies, there are too many variables and moving parts. So the allocation of the gas, the input price, finally what the government comes up with in terms of the pricing that these companies would take. While I do understand that the volume growth story for some of these companies is strong, but given the fact that the allocation part we had major policy change, and government will keep on trying to control the pricing depending upon the elections and other factors. So I'm not too keen to get into this space. While some of the companies like IGL and Gujarat Gas have seen some bounce back, but given the uncertainty around the profitability and the policy framework, I would stay away from this space.
Hemang, let me come to you. A lot of noise that is coming out of the United States at this point in time, and if some of them would actually come to fruition, you would rather see volatility in the markets. But given the fact that there would be some sort of a news around tariffs, and it is happening of late, which companies or which sectors will you bet? Will it be a China plus one strategy, or will you look at US export related stocks, or you look at domestic consumption related counters?
So I think it will be very difficult to take a call on what could possibly be the announcements that could be there, because China part has remained intact, but for other countries you may see more announcements in days ahead, and it would be very difficult to figure out what would that be. But what has come out very clearly is that based on whatever has happened so far, that some of the chemical companies, Navin Fluorine, SRF, Aarti Industries, they seem to be relatively better placed. These stocks have remained quite resilient while the mid caps and small caps were going through correction. But purely on the basis of the current pricing, the tariff related news flow, and the earnings that these companies can deliver, I think that there is a trade over here. There is a case for maybe 10-15% kind of an upside in some of these names.
So apart from farmers, do look out for some of these chemical counters, and that as a theme we have been flagging off in the recent while as well. But Hemang, help us with your take on Kansai Narolac numbers as well, because when we compare these two paint majors, Asian Paints and Kansai Narolac, the numbers for Narolac looks better in comparison to Asian Paints, though the margin drag was a little lesser than what we have seen in the leader. The numbers, of course, had an exceptional gain. But what's your reading being on Kansai Narolac, and which amongst them is better placed right now?
Sector is going through a lot of competitive intensity. When you look at the outlook that Asian Paints has given is not looking that great, even after going through this whole de-rating as we call it. Kansai has a slightly better product mix because of the presence that they have in the automotive segment, the automotive paints, where I think the margins also are relatively better. I do think that there is not too much of a positive takeaway when it comes to the competitive intensity, the margin part, because one has to remember that Grasim and some of the new players, including the ExxonMobil moving out and the other company taking over that, there is going to be more pressure going ahead. And this market share and the margin part will remain slightly difficult for most of the incumbent players. So not too positive at this point of time, either on Kansai or on Asian Paints.
All right, then on that note, thank you so much, Hemang, for joining us on the show to talk about the sectors which are looking good in this current market environment. As you